Hi everyone, this is Whitley Price and Dr. Sean Roby, and today we will discuss understanding salaries. So specifically, we'll look at salary basics, salary growth, and long-term planning. And if after today's session you have any questions or would like for more information, don't hesitate to email the Student Financial Success Center at financial.success@usi.edu. We are located in the Orr Center, room 95. Let's start off with the entry-level salary expectations in Evansville, Indiana. Anywhere from 43,000 to 47,000 or 20 to 22 an hour can be expected as the entry-level salary for respiratory therapist. Now for sonography, one can expect around 64,000 or 31 an hour as the entry-level salary. I want to make sure we have reasonable expectations upon graduation. That said, factors such as location, demand, and experience are all things that can and will influence your salary. As you can see, the two maps from 2022 and 2023, those illustrate how the annual mean wage varies depending on location within the United States. So that left map represents sonographers, and then the right map represents respiratory therapists. You'll see as the shade of blue gets darker, that means the annual mean wage increases, and as the blue gets lighter, that illustrates a lower annual mean wage. So we'll see that the west and more northeast on the map has the highest annual mean wage. And specifically in Indiana, sonography has a slightly higher annual mean wage compared to the respiratory therapist. According to the Bureau of Labor Statistics, the overall employment of sonographers, cardiovascular technologists, and technicians is projected to grow 11% from 2023 to 2033. And likewise, employment of respiratory therapists is projected to grow 13% from 2023 to 2033. So these growth rates are much faster than the average for all occupations, and that's good news for all of you. We'll also want to keep in mind that experience plays a role in salary as well. So you should be mindful that earning capacity grows quickly after those first 2 years in the profession, with year 3 salaries increasing considerably as you gather your experience. But now that we have an idea of entry-level salaries, let's look at pay frequency. Before setting up a budget, it's important to understand the impact of pay frequency. Different pay frequency can often lead to misunderstandings in the budget, so we're going to walk through an example of monthly pay and also biweekly pay to demonstrate the difference. Let's look at the first part of our budget, which is the monthly cash flow. And the monthly cash flow plan allows for us to allocate every single dollar between 11 main categories. Each main category will have subcategories, and we will fill in the monthly expense for each subcategory and then write down the grand total for that main category. Whenever we're done with the monthly cash flow, our total income minus expenses should equal 0. And for this example, we're going to use the monthly details, assuming a salary of $50,400, of course, before tax and benefit deductions, and then a pay frequency being once a month of 4,200. So starting off, as we just look at this, as I said, the 4,200 for the month, and one paycheck as of right now. And I'll just high level run through the total amounts that are bolded. So for charitable gifts, that's our first main category. We have 125 in total, 165 in total for the savings category, $1,220 for housing, $545 for utilities, and $450 for food. And then our next one is transportation. So that's $310 in total, $70 in total for clothing, $110 in total for the medical and health section, and then $190 in total for personal. And last but not least, the debt category, unfortunately, that total number is $1,015. So that's just a quick high-level rundown of the totals for those 11 main categories. And you'll notice once you add all of those totals up from those categories, you're going to end up with that 4,200. So as you see, all of our expenses minus that income of 4,200 equals 0. So we created our budget using the monthly cash flow. But now that we've planned out the entire month on that monthly cash flow plan, we can actually get a little more precise. The cash flow plan that we just did tells us what is in the budget, but not when it's in the budget. So on the allocated spending plan form, we can see 4 columns which represent 4 weeks in each month. We'll now assume that we're instead on a bi-weekly pay rather than the monthly pay that we just demonstrated. So we'll only use the column for each week we get paid, and we'll go down the list and allocate each expense to a specific pay period, using our bill due dates as a guide. The point here is to anticipate our upcoming expenses and income so we can plan accordingly. So as you can see, each line will have 2 blanks separated by a slash. Expenses are what we spend to go on the left, and the remaining income from that pay period goes to the right of the slash. We'll work through an example of our first paycheck together. For this, we're going to need the allocated spending plan details. So let's look at our income. If we take our monthly salary and divide it by 2, receive a paycheck of $2,100 on the 1st and the 15th of the month. All right, now that we have our income in place, we now need to look at the period/description column of the details. Again, focusing on the bills due during that first pay period, we spend our paycheck down to 0. We'll place whatever we have left over into the savings category. So let's walk through the first pay together. So for the first pay, we've got $2,100 in income, and going through those main categories again, we can see on the first we put 140 into savings. We pay 1,000 for housing, for the rent specifically, and then 120 in real estate taxes, 100 in homeowners insurance, and as you can see, after those 3 bills in the housing category, we're remaining $880 of that $2,100 paycheck. So fast forward down to utilities. By the time we pay our electricity, water, and cable, we're left with $525 of that paycheck. Go through food, we have 305 left of that. And then if you flip to the next page, by the time we pay for transportation, we have 230 left. And after clothing, it drops down to 180. And then we take care of hair care. We have 160 left of that paycheck now. And after a little bit of blow money, $20, then we have 140 left. So that you can see back on the very first page, we were able to put $140 into savings after paying for all of our expenses for the month. Now, we mentioned before these examples that different pay frequency can often lead to misunderstandings in the budget. What assumption do you think we made that could really hurt our planning? If you said it was dividing that monthly income by 2, you are correct. So we can't divide that monthly income by 2 because if we're doing biweekly pay, there are 26 biweekly pays in a year because there's 52 weeks in a year. So if we make that $50,400 salary, our biweekly pay, if there's 26 pay periods, should actually be $1,938. So that's a decent difference there that could definitely lead to a misunderstanding in your budget. So now that we've got that correct number, let's rerun through that first pay period using all the same expenses, but with the correct new biweekly pay of $1,938. So as we go through that, you can look, we put the 1938 on the income line instead of the 2100 this time. instead of starting with savings, we will just start with our bills. So the same 1,000 for the housing first mortgage and the same 120 for the real estate taxes, as well as 100 for homeowners insurance. But you'll notice that by the time we get to the end of the housing section, we're left with 718 this time rather than the 880 and that first paycheck with the 2,100. So that said, you can already tell that we're going to run out of this paycheck quicker because it's a smaller amount. So fast forward to utilities. By the time we get done paying electricity, water, and cable, we're left with 363 of that paycheck. And if we go through the food category, we are left with 143. Go to the transportation, and then we're left with $68. And clothing, we're left with 18 by the time we purchase that. And then once we come down to hair care, it'll actually result us in a -2 that we can see. So that's just showing that we were actually way off if you just divide your monthly income by 2 for biweekly pay. You wouldn't even be able to put into your savings account like we did in the initial example. So we just want to make sure that we're accounting for that and not just dividing that monthly pay in half to get our biweekly pay. So that said, it's not necessarily that your annual salary is changing, but that frequency of pay is affecting your monthly income in total. Specifically in this example, it was $323 less than what we were originally planning for in that first example. So therefore, it's just important to keep this in mind when you're setting up your monthly budget. Okay, so regarding salary growth and long-term planning, we want to consider things such as cost of living, career advancements and salary increases, and continuing education that impacts earnings. As one could assume, living in Evansville does not cost the same as living in places like Nashville, Phoenix, or Chicago. So if you aren't planning to stay in Evansville after graduation, it is very important to plan for the difference in the cost of living. To calculate the cost of living difference between Evansville and these examples of Nashville, Phoenix, and Chicago, we used Ramsey's cost of living tool. It's free to use and can be found on Ramsey Solutions homepage. Sticking with the same $50,400 for the salary, we can see that $50,400 in Evansville is actually equivalent to $53,203 in Nashville, Franklin, Tennessee. So overall, the cost of living is 6% higher there than in Evansville. Now let's compare Evansville to Phoenix. That $50,400 is equivalent to $57,246 in Phoenix, Arizona. So the cost of living is 14% higher in Phoenix than Evansville. And lastly, let's compare Evansville to Chicago for today. Does anyone want to guess how much a salary of $50,400 is equivalent to in Chicago? Well, Chicago's cost of living is 23% higher than Evansville. Therefore, the $50,400 salary in Evansville is equivalent to $62,043 in Chicago. That's a really big difference. So if you're on the cost of living calculator and you scroll down, it also provides a cost of living breakdown just in more detail. For example, you can see the comparison between average rent bills in Evansville and Chicago, and the calculator has automatic numbers that are generated into these cells. But you can insert your own and personalize it as you wish. And the breakdown also includes comparison in categories such as utilities, food, transportation, healthcare, and lifestyle. Hopefully, if you weren't already taking cost of living into consideration, you are after walking through these examples with us. Again, you can find all this on Ramsey Solutions homepage under the tools, and it's free of cost. So, when planning long term, you're also going to want to consider career advancement and salary increases and continuing education. If you plan to continue education, you need to plan for how it's going to be paid for and understand how it will impact your earnings. How long will it take you to break even for what it costs you to continue that education? Or how much will you be earning compared to if you didn't continue your education? These are the types of questions that you want to ask yourself before jumping into anything without a plan. But regardless of if you have a balance or not, we are here to help you learn a life skill that can help you reach your personal goals. So if you know of someone who could benefit from our services, tell them about the Student Financial Success Center and help them become a client. Or if you wish to yourself, we'd be more than happy to meet with you. Our office hours are 9 a.m. through 4 p.m. Monday through Thursday, and then 9 a.m. to 2 p.m. on Fridays. We look forward to walking with you towards a lifetime of financial wellness. Thank you.